the US is 25% of world GDP. It is 87%, the US dollar is 87% of every trade transaction in the world. And it's also the most indebted nation in the history of the world. It's 100% of world GDP in debt. But not only that, everybody else is in debt in dollars. So when things get scary, you go to the safest asset, which is the dollar. But there's always a scarcity of dollars because the US is only 25%. So it can't ever generate enough dollars for the system until it massively prints dollars and then gives them out to people. So the dollar is always in short supply globally. And in recessions, it's in extreme short supply. So right now, because the Fed are taking dollars out of the system, the dollar is going up a lot. So over time, this dollar shortage just keeps playing out. Everybody uses the dollars because they have to, because 87% of trade is in dollars. So you've kind of got a gun to your head. You need to use dollars. So when India buys oil from Mexico, let's say, whoever you buy it from, or from Saudi, you pay dollars. That's neither of your base currencies, but you have to go and buy dollars in the open market to do that. Well, it's not your currency. It's not the Saudis' currency. Yeah, sure, Saudis pegged to the dollar because they have to be, because oil's priced in dollars. So this is the issue, is everything is in the dollar and nobody has it. And the US is in control of it, which is why those bunch of baby boomers based in Washington control the world.
So is it fair to assume it's like a marathon where, like, when they flag off, that's when they start printing and everybody sprints as fast as they can to the other end of the risk curve? And then, you know, if there's like a freeze sign, everybody freezes and retreats into maybe it starts raining and everybody retreats to shelter, and that shelter is dollar, and everyone's waiting for the rain to stop again so that the checkered flag can go off. Sounds like an insane game that millennials are forced to participate in just to be able to buy a house. It's sort of like 2 clicks away from, some sort of unsupervised gambling.
And don't forget, for millennials to buy a house just means they have to take on more and more leverage, much more leverage than their parents took. So it becomes a riskier and riskier bet at all times. Now, that means that the central banks are aware of that, so they try not to let things go wrong. So what do? Print more money, which makes the house prices go up even more, so people have to use more leverage. I mean, what a mess. But that's the mess we're in. And you can either blow up the entire system and destroy everybody and all wealth, or you can try and do this and hope that over time that the purchasing power of money erodes the debt. That's yet to be proven out. The US did that in the 1940s after World War II. They kind of had negative real rates, so interest rates less than inflation for an extended period of time, so the debt burden went down. But we haven't done that very well so far. I mean, debt to GDP keeps rising.
Maybe we can do one more question on macro, Raoul. I want to ask you about inflation versus deflation, but maybe we can do it in the following way. If you had to map out scenarios of how this could play out, and if we were to think about this probabilistically, what are the 2 or 3 ways that this could play out, depending on what the central banks do or don't do over the next 3 to 5 years?
So there's 2 schools of thought. The current strongest narrative, which is not the view I share, is that in a world that is deglobalizing, like we're taking Russia out of the world, we're trying to remove China out of the world, there's not enough, and also a world that's moving towards moving away from fossil fuels. We don't have enough investment in mining fossil fuels, that kind of stuff, and therefore any demand in the upcycle means that prices rise and we get inflation. Also, the fact that people like the US or the Europeans have to build factories in their own countries, i.e. onshoring, means that wages rise in those countries. And therefore, people are suggesting that prices are going to be stickier for longer. So they're saying the big narrative is, well, inflation's probably going to be about 4%, and therefore interest rates about 4% for another 5, 6, whatever years. And we've gone to a new regime. My argument is the regime looks confusing because we had the pandemic, we shut down the world, we reopened the world, there wasn't enough supply, so prices rose massively. And we're seeing the recession that has caused. Interest rates went up, prices went up, everyone's like, oh my God, I've got no money. And the downside of that, I believe, is deflation. And I think deflation is a structurally larger force. Why? Because in the Western world, the population is aging. It's completely the opposite of India. So India average age is 28, the United States is 58, and Europe is older. So we have a record number of retirees. Now, if you've ever seen your parents retire, one thing they end up doing is not spend as much money. Why is that? It's just human psychology. You don't know how long you're going to live for, and you've got a fixed amount of money left. So the first thing you say is, oh shit, I need to stop spending because I don't want to be 85 and homeless. Right? So it's a really strong thing. So spending collapses. And so the economy tends to be deflationary. But then there's another mega power, which is globalization. Even though we're in globalization retreat, don't forget, places like India become the net beneficiary here. If China's not the great counterparty, then India is more neutral in the middle and is a more trusted counterparty with the rule of law, etc. So globalization continues, but maybe more regional. Okay. But then there's the really big super trend, and that's technology. Basically, everything that gets digitized goes to zero in value. I mean, everything. So cloud computing, computing power, computing chips. I mean, you name it, televisions, mobile phones, everything goes to zero. So it's an incredibly deflationary force. And that's only about to accelerate because we've now got green energy, which is getting cheaper and cheaper and cheaper and cheaper, and that's going to accelerate. We've got artificial intelligence, which is replacing humans, robotics replacing humans, biotech sciences, we've got Internet of Things, we've got so many, we've got space, we've got so many massive technologies all going exponential in their adoption all at the same time. That's a very, very, very deflationary force. So I think deflation is the more likely outcome. And to give you a historical comparison, we've only really shut down the world a few times in the past. The last one was obviously World War II. So World War II, the whole world was shut. Everybody was out of the labor force and in the state sector or in military or working on bombs and planes and that stuff. So what happens after World War II, 1946? Everybody comes into the labor force looking for a job. Everybody wants to spend some money because they've been out in the military. Nobody's in the factories yet. So we get this massive supply demand issue, which is very similar to post-pandemic. And what happens is CPI in the United States goes up to 20%. The Federal Reserve raised interest. Well, it wasn't the Federal Reserve raised rates. And then what happens is we went straight to deflation 18 months later. Then we have a rebound, and then we settle in this period of interest rates were about 3%. Inflation was about 3% and interest rates were about 2%. And we did that for 20 years, a massive fiscal stimulus.
Okay, so you predict that they're gonna keep raising rates or keep it stable until demand collapses. We're gonna get some deflationary forces, and they're gonna be forced to reduce rates and or ease again, and it's back to party time.
It's back to party time, but because we're still swinging that pendulum after the pandemic, we'll probably have a rebound as the economy recovers and inflation it's not going to entirely disappear. So rates might rise again, but then we really see the bad side of this whole demographic technology thing. So, I'm very bullish on risk assets over the next 10, 15 years. I think it'll be very positive soon. Then it'll get a little bit, again, volatile. And unless something changes geopolitically, I think we're probably setting up for a new Renaissance golden age because of what's happening with technology.
Should I buy a house or no, guys? Like now?
Yeah, your game is to buy it ahead of all the 28-year-olds when they get to 32, 34 and they want to buy a house. Right. India's very different.
Okay.
right? You've got to go back and look what happened in the United States in the 1970s. That's where India is. And what happened was you actually got quite a lot of inflation because everybody left home, got a job at the same time, bought a house, bought a car, bought their first suit, bought their first table, chairs, everything, right? That purchasing power is enormous. All of the young Indian population are going to go through this, and you might get significant inflation for a period of time. It depends whether you can offset it with technology and other stuff. It's structurally a different economy than the US was in the 70s. But yeah, my advice is Indian property is expensive. It's going to get more expensive. 2 billion people into it in 2 years. This has never been done before. That's the speed of technological adoption. So let's go to crypto. Crypto right now is the fastest adoption of any technology the world has ever seen. It's twice the adoption speed of the internet.
Sorry, do you mean by number of holders?
Increase in number of holders per year is faster than users of the internet in terms of growth from the first 5 million users. That's where I took it from. So crypto's still great. This year will be a much flatter year, but it was growing at an average at about 160% a year, and the internet was growing about 80% a year. It's twice the speed. So we have never seen a technological adoption as fast as this. And so does interest rates stop that? No. Change in interest rates is the thing that stops it. That liquidity, remember, it's year-on-year rate of change. If they just stopped interest rates, if the US stopped interest rates here, over a while, the rate of change goes flat. Assets can do fine in that because remember, it's technology adoption that actually drives the price over the longer run. So it's the rate of change that's causing it. If the rate of change goes to zero and it flattens out, i.e. interest rates stay sticky, then the chances are that we just get the trend rate of adoption of the technology over time, which still gives it 100% a year rise.
Got it. So
It's always been, I think of the world as accumulating lifestyle. Quality of life is the game. It's not money. That's why I lived in Spain and the Mediterranean coast. That's why I live in the Caribbean next to the sea. It's quality of life. It's not about money. So what you're trying to do is bank quality of life. And that's different for different people. You know, so it could be a cabin in the woods for somebody else, or it could be a private island for somebody else. It doesn't matter, but it's that quality of life that I do. Now, I also semi-retired. And what I learned was that without intellectual stimulation, I went awry. I discovered, living in a beach town in Spain is probably not the healthiest thing to do because it's just a 24-hour-a-day party. And I realized that intellectual stimulation was what I liked the most. And so that's when I made that decision, and I looked at a number of different opportunities that I wanted to do, and I chose Real Vision, which was a stupidly hard thing to do. And we're still there, but so that was all consuming and really hard. Global Macro Investor was what paid my bills, and that was the epicenter, the genesis of everything that I did, because that group of people were the seed investors to Real Vision. But then once I saw very clearly what was going on with crypto, I wanted to make the biggest bet of my life. That's with my time and energy into this one thing. So I knew that, okay, Real Vision was moving more towards Web3. Global Macro Investor, I write about it. I still write macro, obviously. But I want to make two big bets. Going back to this story of how young Indians should think about finance, I just took the same thing. Is what is the secular trend here? One is all the institutional investors, all the rich families, everybody's going to come into crypto. Right now, it's too difficult for them to do. They don't want to go and figure out wallets or custody and all of that. And it's becoming more complicated. It's not just a Bitcoin world anymore. It's a complicated technology world. And we're all feeling a bit dumber every day as this space gets smarter and smarter. So I thought, how do I solve this? And I thought, what we'll do is we'll create an asset management company that invests in the world's best digital asset hedge funds. So let the hedge funds focus on what they do, which is finding the best opportunities in the space. We'll build a broad basket. So now big investors can come in. And that's the start of the asset management business. So that's one bet. Everybody in finance is going to invest in this space. What's the other bet? The other bet is, everybody's going to be using blockchain technology. It's going to change the world. And it's going to be a consumer application of massive scale. Because if I extrapolate the trend rate of growth, we get to about 4 billion people in the next 5 years. So this is going to be another Cambrian explosion. So what are those use cases? So I had a thesis that culture is becoming the new asset class. So this is culture and community. And where those are strongest are music, sports, film, TV, book franchises, and fashion. It's inevitable because we as humans want it. We as humans understand some of the fragilities of the system. Humans' two strongest emotions are fear and greed. Crypto works for both of them. Fear is, I want to keep my money. I don't want it taken away, and I don't want it debased, and I don't trust you. And greed is, hey, this is a perfect behavioral economics incentive system where if we all participate in the network, the value of the network goes up. So this is a very powerful force. Imagine if Facebook, when it started, so Facebook works by giving you a bunch of free tools, monetizes your attention span, and the shareholders get rich, and you kind of get abused, but you get the free tools. So it's a trade-off. Imagine if Facebook had given every single user free shares. You would have told everybody about it and would be passionate about it. That's all crypto is.
Do you think Real Vision will launch its own token someday?
Oh yeah, we're working on it now.
Okay, there we go.
Our NFT, which is up, I just worked out this morning, 600% in the last month. We've got a Genesis NFT, which is starting, which is what we're building out our whole Web3 business. We've got another NFTs coming this year, which is going to create a community around fantasy trading, of which that's going to seed another group, which is going to be tokenized asset management, where we get the hive mind, the crowd, to start creating asset allocations. And so then because they're smart people, we want to do that. But the Real Vision token's coming as well. So it's all part of this Web3 explosion at Real Vision that's happening right now.
Sorry, the glint in your eye is blinding me.
I'll tell you what it looks like, because I've got it on my screensaver and most people don't know about it. It actually says the super community of finance built on the super platform of finance. So what we're doing at core is finance is a bunch of disparate communities. India wasn't part of the Americans or Europeans, wasn't part of the South Asians. Well, we want to bring both geographic people together, but also crypto, macro, single stock investors, precious metals investors. We want investment advisors, asset managers, students. We want all of the communities of finance, and we'll overserve them. Like we're doing with India, they can use the existing content because it applies for them, because Real Vision goes across everybody, but we'll create new experiences for all of these communities to super serve these communities. And to do that, we're busy building out a super platform of finance.